The recent crypto polar vortex has left many investors scrambling to pull out of the market. Unfortunately for those that use the crypto lender Celsius network for their market dealings, things might not be so easy. The company recently filed for bankruptcy, and the exact means of such might leave some creditors hanging to dry. We'll be covering that news and more in today's video. First up, Celsius network declares bankruptcy. If you're someone that keeps up with crypto news, the recent report about Celsius network probably didn't come as much of a surprise. Early in July, the company had filed for Chapter 11 bankruptcy protection in federal court in New York. The news came after more than a month of users having to wait to hear from the company about the withdrawal situation, an action which was halted by the company due to self-reported extreme market conditions. Of course, anyone following the state of the market knows that there is certainly some turbulence. What's most concerning is how the company is choosing to deal with the situation. Before we get into the details of the response, let's talk about what the company's financial situation is like. In the court filing, Celsius CEO Alex Mashinsky reported a deficit of about $1.2 billion. As of mid-July, the company had about $4.3 billion in assets, but about $5.5 billion in liabilities, of which $4.7 billion was accounted for by consumer users. That's a pretty big hole that needs to be addressed, and many users are unlikely to receive their fair share just yet. The reason why things might take some time for users to get their investments back is because of the type of bankruptcy that Celsius has filed. There are a few options available for a company in financial distress, and Celsius chose the Chapter 11 filing. A Chapter 11 filing most commonly prioritizes repaying secured creditors first, then unsecured creditors, and then finally equity holders. Secured here means that the investors had obtained certain assets as collateral or security when they made their loans to the company. Unsecured creditors are therefore those that do not have collateral as part of their deals made with the company. At the moment, it's unclear how Celsius and the courts will treat users that have been prevented from accessing their funds. But if the company's terms of service and court papers are anything to go by, it seems like users might be served as unsecured creditors. That puts into question whether users will be able to regain some or all of their invested assets, and when exactly that refunding will take place. This will likely be a primary topic in the upcoming bankruptcy hearings for the company. Next, dishonesty and customer response. Before any of this had actually taken place, and before the company was brought low, users were already concerned about the stability of the platform. Celsius constantly held itself up as a secure alternative to traditional banks, and promised its users higher interest rates. Customers had also been given the option to pay with their credit cards and bank accounts to avail crypto assets. Another gimmick to entice customers to use their platform was their offer of 20% returns on deposits, as well as 8.8% returns on stablecoins like Tether's USDT. These offers weren't positively received by many in the community, who believed that there were risks with such frivolous policies. However, Mashinsky regularly downplayed the notion that the company was facing issues by calling the negative discussion surrounding it as FUD. FUD stands for fear, uncertainty, and doubt, suggesting that the people that had a problem with Celsius were just overreacting and didn't understand what they were doing. But now that the company has declared bankruptcy, those concerned users finally feel justified in taking the issue up with authorities. Many customers have sent letters to the bankruptcy courts, arguing for their rights to access their funds, stating that they had felt that Mashinsky was dishonest in his dealings with Celsius's consumer base. One user, Stephen Richardson, said he regularly kept up with the company's Friday discussions on Reddit, where Mashinsky constantly assured customers that Celsius was safer than banks. He cited that Celsius doesn't rehypothecate and make use of what's known as fractional reserve lending as traditional banks do. Another user related the same thing, adding that Celsius also claimed they had billions in liquid cash. Though Celsius had only addressed concerns about their supposed rocky financials in July when they halted user withdrawals, people have been questioning their risk management procedures for years. Such questions arose when, in June of last year, crypto custodian Prime Trust withdrew from their dealings with the company after their risk team expressed concerns over Celsius's policy of constantly rehypothecating assets, something Mashinsky is reported as saying they don't do. value. It had been using Prime Trust for more than a year at that point to store assets for some of its consumer base. Lastly, why Celsius declared a Chapter 11. The reason why Celsius was able to file for Chapter 11 bankruptcy is because it's not a registered broker-dealer. Apart from the priority list for repaying debts, Chapter 11 also means that Celsius businesses will be allowed to operate so that they can reallocate finances to repay creditors. If the company was regulated as a securities or commodities broker, or if they had filed for a Chapter 7, they would have had to liquidate, allowing the court to sell off their assets in order to repay customers. However, as it stands, they'll be allowed to resume their businesses, and to do so, it's attempted to free up as much operational capital as possible. They recently opened up more than $1 billion in assets like WBTC and STETH tokens by paying off debts to decentralized finance protocols like AAVE and Compound. Next, in other news, a study shows countries still interested in crypto. The recent crypto market crash has led many investors to reconsider their positions, and most that haven't already succumbed to the crypto craze to hesitate in purchasing digital assets. However, as a recent study by CoinGecko indicates, some investors in particular countries are treating this as the regular progression of the market's growth trajectory. The study takes advantage of Google Trends search statistics, which showed that users in Nigeria are the most obsessed with cryptocurrency in its current state, having an overall score of 371. If you're wondering how the score is determined, know that it's a total score of a combination of search terms ranging from cryptocurrency, invest in crypto, Bitcoin, Ethereum, and buy crypto. The United Arab Emirates as a whole came in second, scoring 100 points below Nigeria, and third place went to Singapore with a score of 261. Nigeria has been one of the most interested countries when it comes to the crypto market, even before the crash occurred in April. That interest could be attributed to a struggling economy, whereby crypto served as a means of storing value against rising inflation and devaluing local currency. There was a previous study back in April that showed that almost 35% of Nigeria's population were crypto investors, supporting this CoinGecko study. The crypto craze isn't just limited to the civilian population, though. Nigeria's authorities have also outlined the potential benefits that cryptocurrencies might have for the financial sector. The Central Bank of Nigeria pointed out the innovations that the technology has brought, and it's forced many institutions to alter their operations to accommodate it. Secondly, prices of original Ethereum soar. During the latter half of July this year, Ethereum's ETH coin rose in price by about 50%. The rise comes during a period where the coin is seeing a switch or merge to a different kind of blockchain technology. The technology, called proof of stake, is said to be much leaner and more efficient than the older proof of work tech. The two work on different principles when it comes to verifying the owner of an asset. However, that rise in price is negligible compared to what's going on with Ethereum's original coin, Ethereum Classic or ETC. You might say ETC is kind of an illegitimate knockoff of ETH, but considering the creator of Ethereum gave it his blessing, we'd say that really isn't fair. Regardless, what's important is that ETC's value has nearly tripled over the last 3 weeks, almost reaching highs seen in March prior to the crash of the crypto markets. Last up, former Pakistani Prime Minister hacked. Pakistan's former Prime Minister, Imran Khan, recently made worldwide news for an incident regarding his Twitter account. Khan might be one of the most influential political personalities in Pakistan at the moment, but that doesn't mean he's exempt from the devious machinations of hackers. He recently announced that his Twitter account was hacked with a news story published by Dawn, a prominent news organization in the country. The hackers had altered his bio to include a link leading to a scam website, and also published a screenshot of a tweet supposedly made by Tesla CEO Elon Musk. The website allegedly claimed to give away $100 million in crypto assets, including Dogecoin, Bitcoin, and Ether. However, with the help of Meta, owners of Facebook and Instagram, Khan soon recovered ownership of his account. That's a wrap for this video. What are your thoughts on Celsius's downfall? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.